This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe. I'm going to give you a stock market update as of Thursday's close for Friday morning. I am going to go through the market conditions and look at sentiment. I want to look at the overbought, oversold, and volatility before we get into the trends and the momentum in multiple time frames. So let's go ahead and get going. I am going to spend a few minutes on my timeline chart. And I'll explain to you what that is when we get there. So let's look at what's taken place. So the sentiment is creeping up, all right? We're up to 25%, the difference between the bulls and the bears. And the bulls are up to 48%. So it's still not there. I mean, you'd want to see this up in the mid-50s here, and this probably up in 30 or higher before we get into kind of a little bit of a danger zone. So it's still neutral right now, but I think it's something we got to keep an eye on, especially based on the fact that we're now back to overbought on the 5 RSI. This short-term oscillator is now back to overbought again. And we'll have to see how the week closes out to see if it finishes the week in an overbought territory like this. 75 to 80 is pretty overbought for this indicator. So we'll just have to see. But as I've been saying, if you've been watching this for, the last few months, what I'm looking for is 2X's here. This would have to go up again, hit 30, and then we'd have these 2X's in place. Now, if by the time that happens, we're showing better momentum on the weekly, then we would be just looking for a pullback. It could be a pretty good size pullback, but we'd be looking for a pullback. If we don't get any improvement in the weekly momentum and it just continue to kind of push higher without a lot of strength behind it, then this negative signal down here could be a lot more forceful to the downside. It could have bigger implications. Now, I think before that happens, before we get a signal from these indicators where these are negative, I think we're going to have at least the daily volatility turn negative as well. Because right now they're both positive. We're still looking at the average true range on the daily below the declining moving average. But if you notice what's happening, it's starting to tick up. For this, so this isn't enough. I mean, if we get above this, we call that neutral. We really need it to push up enough. And I like to see a little higher low like that and have this turn to the upside. And if we have that, then this would go from positive to negative. And that would be, I think, a negative, especially based on the fact if we're trying to break out here, like convincingly break out. So something we have to watch. Now, on a bigger picture basis, this still looks really fine. We could rally up a little bit in terms of the size of these bars could increase without really having an impact on this indicator. It's pretty strongly bullish in my view based on volatility. There's just not a lot of sign of distribution here. Now, that doesn't mean we can't pull back. What I'm saying is to be looking for some kind of a big, strong plunge to the downside prior to any sign of increased volatility, I think is pretty rare. So we're going to need to see the size of these bars increase before we can expect that. We can get a pullback, and that might take place if we keep staying overbought and we get more bulls, which I think is going to happen. If we get a clean close for the week above 4,200 with a solid close on Friday, I just have a feeling we're going to see some of these guys throw in the towel and get a little bit more bullish. So we'll just have to see if that plays out that way. Okay, so we've covered this. I want to switch over, and before I get into the trends and momentum, I want to look at the so this is my timeline chart where I've got a daily 18, weekly 18, monthly 18, quarterly 18, and yearly 18 MA. And I just line them all up on the chart. This is the yearly way down at the bottom. This is the quarterly down here where we came down and basically tested back in October of last year. And then this 18 has been kind of providing resistance up until now. We're finally kind of punching through this line. So we failed at it here, failed at it here, failed at it here. Now it's still declining. But the fact that we're able to punch through this, I think, we have to give it some credit. When we get into the momentum, you'll see why I'm still thinking this is a little suspect and we need a little bit more confirmation. But overall, we have to respect what's going on. Now, the way I would look at this is if we break the 18-day, then you got to assume we've got a really key level right here. This 4089 to 492 right in here is a key level. All right. And the reason is we have both moving averages there. Now, the fact that this is declining and this is rising, I mean, I still think the fact that they're both right at this level is a key one to watch. So it's important, I think, to look at this chart every now and again just to see if anything's lining up in a key area. So if I take this line across, I've got key bottom. I know it overran a little bit here. Look at the failure there, overran a little bit. And then look at it, it's been above and below. But look at where these lines are. It's right at where that line is. So that'll happen quite often where these moving averages will line up with key pivotal levels. So we want to watch if we do get any kind of a retracement. I think we've got to keep a really close eye on this 4090 area. That's the main reason I wanted to pull this up, but you can see what's going on here. It got way overdone. It went through a pretty severe decline and correction back to the quarterly line. It did that here. It overran because of this was a much more fierce decline, and you can see the volume pattern and everything. This was more of a climax decline. This was more of a steady drop. So in this case, it didn't really have any overrun. It just basically came down very close to touching it and has bounced off. The fact that we are working through the 18-month, I think, again, we have to respect it, but we got to be cautious. Just remain cautious in the way you play this game right now until we get better momentum confirmation. And what I'd really prefer is to see a little bit of strength here and then some kind of a pullback while this line is cupping around. If it's going to play out bullishly, I think that's going to be really the best entry. And if it's really going to work. All right, so let's start looking through these patterns real quick. I mean, I don't think it's a small thing that we have a close above the 18 on a monthly basis, right? You can close above it on a daily, like close above the 18 month with a daily bar or a weekly bar. But the fact that you closed above it on a monthly and then closed again above it on a monthly, we took out the high, the bar that closed above, and we are now moving up again, right? So, I mean, I'm not going to ignore this. I just don't like the fact. Look at the size of the bars. You see how small these bars are? I mean, it's no wonder that the weekly average true range is so small. I mean, these are really small bars. It's not really decisive strength. So, but that doesn't mean we can't push up here and then pull back and survive. It's just we don't have a really clean setup yet. MACD is still below its signal line, and green DI is still below red on a monthly chart. Okay, so we know that we're still in transition on the monthly chart, but there's signs of improvement. All right, we got the same thing going on the weekly. We've got a break of the downtrend test. Now we're, pretty decisively coming up above this horizontal line that classified it as a 3. What I'm telling you and what is bothering me is the fact that we have done that, and this red DI, green DI cannot take out its prior peak. And if you think about it, I mean, it's way below 25 and this peak here. So we're making lower highs in green DI, and that's taking place while we're making a higher highs in the price action, right? So we've made a move up, pull back, and then a move to a new high. This is not confirming yet. We're going to need a better bar. I mean, we need a big, strong bar to the upside to create some positive DI and get this to break out. I think if we had that, it would be a lot more convincing setup and probably suggests to me that we're heading back up towards this 45, 4600 area for the S&P. The trend is up. There's no doubt that the trend is positive, and we have confirmation on a MACD basis. It's just these lines are pretty close together. This is where this is what I like to see, where there gets separation and then we pull back. This is more like, yeah, it's more like an upward drift. This type of movement where we separate away and then pull back, separate away, pull back. You see that? This is decisively negative, then rally back, decisively negative, then rally back. That's what you're looking for. And this is, again, I would call this more of an upward drift until we get something a little bit more decisive. Respect it, but be cautious about how you go about it. I wouldn't go crazy, hog wild, diving into everything just because the market is back above 4,200. So here's the other thing that we should respect is that, and this is something I've been saying in my report. So we made this move to the upside. It broke out. This confirmed, and then on the pullback, these did hold, even though this was sloppy. And now we've moved back up, and this has moved back up too. So this actually looks pretty good. This is what I want to see on the weekly chart. It's not like, I mean, look at the volume pattern. It's really not all that great, but it's good enough to keep it kind of continuing to drift higher on a weekly, right? So this trend is positive enough to keep it working higher. What we're looking for is, you know, a move up, a pull back, maybe the size of the bars grow, and then this goes to a new high, and this fails, comes back down, or we get a crisscross or something like that, or a little bit of divergence or something to develop from here. We do have a reset, so we want to start looking for divergence now from this point on. Okay, so we could be creating that right now, but we need something a little bit more decisive. We need the size of the bars to grow, and then I think we have a little bit more evidence of a problem. But, you know, if I'm looking at this and I'm saying neutral, positive, I guess you got to call this positive, but this isn't even as important. This is more of a timing tool for when this starts to drop. If we get some harsh selling and that ATR starts to grow and break above, and we get kind of a danger signal in the short term, we get some kind of a move like that, and it comes down like that, then we want to be on the hourly and looking at the ADX, looking at the MACD, and trying to find entry to hedge our longs if we want, or, you know, maybe set up a short play. So that's really where I am with this right now. It was a good sign to see a lot more sectors up today. The only two sectors that were down were consumer staples and utilities. Everything else had a decent day to the upside and participated. So, you know, a little bit more encouraging than what we saw when the semis broke out and it was really just the XLK going up. All right, so that's the update for the week. Let me know if you have any questions. Thanks.